Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov. I look small. I don't know. I got to get bigger in my chair. Okay, here we go. So we're the same size. Anyway, I hope all had a good weekend. I'm excited to talk about the week that was and the week that is ahead, which I am seeing things. I'm not seeing ghosts, but I'm seeing things that make me a little bit cautious, more cautious than I've been. I'm sure you were really bearish last week. I'm sure you've blown out of that thing since the market didn't go down. 4 days of you bearish is kind of like going to turn you into like a goblin or something. So hopefully I'm alone on this trade right now. But anyway, I want to talk a little bit about the end of last week. Again, we always talk about this on the show, and it's really kind of funny. We had a huge jobs number, right? And the jobs number came in a little bit light. They were looking for 71,000. It came in at 38,000. And that sent the market in bonds into a tizzy to rip yields down and rip bonds up. And there's like 350 million people in this country, and we missed by 38,000 people. I mean, isn't that a rounding error by far? I mean, I would think so. But somehow the market is taking that good. This week we got PPI and CPI. Somehow the new boss, whoever they put into the control of that number, will be taking that number down. They're like, take out the 2 and make it a 3. So I'm not expecting a lot to be shown, but last on Friday, the market reaction to the jobs, which I thought was surprising off go, was higher. And the market rejected that high significantly. And as you would say, I'm going to use one of your terms, we had a 2 sigma move down, which is
One and a half.
literally,
It was only one and a half. One and a
it was
half.
110 handles. I think it was 2%. So whatever, I don't know, 1.5, close to 2, whatever it was. And then literally all of a sudden, I think the guy went behind the curtain and he shut off all the algorithms. And we literally stopped trading for 3 straight hours. We didn't move. And what was interesting to me last night is I was looking at puts in the SPX, which we trade actively pretty much every day through our LSP spread trader product. And I was asking Thomas for a put spread down 50 points. Now, 50 points is 80 basis points. That's not really a lot. We just rallied up 40% off the low. So 80 basis points for 2 days. And that option was under $2. Volatility is at 9. Okay. Straddle, we talked about it before we came on the air, is $20. People want to sell that. So I just, there's one of two things happening. Either people are at the end of being long volatility and can't handle it anymore and just selling at any price, which could be the case. I don't think so. But other than that, I think just people are disgusted with buying, whether it even be puts or calls. And it's interesting, I got a lot to talk about. Zero DTE volumes are exploding to record levels. I was talking to a buddy, and we traded one of the most active indexes in the 80s and 90s and even into the 2000s. And a big day in that index was 30,000 contracts, 30,000, 40,000 maybe. These things are doing 10 million. They're doing millions and millions of day options. So to me, isn't that a gambling casino? You only have 1 hour, 3 hours, 5 hours. That's not investing. That's the farthest thing from investing. So what is it? And and the computers, the Jane Streets, the Citadels, they know what's going on, and they jimmy the market up and down, jamming through these gamma strikes. What I mean by that is if you sell one of those and it goes in the money, you go from 0 delta pretty much to 100 delta, because really it's just the 0 day option. So it's either out of the money or in the money. And that's what's going on here. And it's at record record numbers, and it's the farthest thing that I've ever seen from investing. I mean, if you tell me it's not, I'll listen to the argument, but how is this not pure gambling? The people doing it don't have an expertise in what they're doing. There's no way they do. No one that does this has more than 5 to maybe 7 years of experience. Maybe there, a couple that might, but overall, I would think that the landscape is all novice gamblers, all over the world that are trading these zero DTEs. And to me, doesn't that make you feel like something can happen here? Like you think that they don't want to make 20%, 10%. That doesn't entice anybody anymore. They want to make 200% in a day, and that has got to be pure gambling. So I think we have huge volumes coming through all these zero DTEs. On top of that, Eric, they're putting out Monday, Wednesday, and Friday equity option expirations in the top 50 stocks. That's coming in the next few weeks. There's going to be just so much, I would call it crap on the page, that it's unbelievable. We went from having one option expiration for stocks, futures and everything, which is our favorite thing, quad witching, which only happened, quad happened once a quarter, but the serial expiration happened once a month. We're expiring today. We're expiring tomorrow. This is Casino Royale. And then I'm gonna let you take over. But then ETFs, there are more ETFs right now than there are individual equities. There are more ETFs out there. And 75% of these ETFs, maybe more, are some concocted, leveraged, crazy thing, or yield distribution, giving you back your money, thinking you're getting a dividend, and then having negative NAV destruction, and they're buying billions and billions of dollars of these things for customers. So between the gambling aspect and the fact that everything is leveraged or yield, giving you a everyone says to me, they're like, does your ETF give a dividend? And it could, but it's no different if I distribute the money at the end. That if I'm not making money to give a distribution, is just a return of capital. But people are
Right.
confused. People are confused and they're dying for this. So I'm telling you that what I'm seeing here is it's crazy town. And I'm not, listen, I'm just telling you something is going to break at some point here. There's just too many stocks,
That's funny.
too much
That's funny you
leverage,
mentioned.
and too much gambling.
It's funny you mentioned dividends in your ETF. It reminds me of a conversation we had where we're talking to marketing people, and they're in marketing. They're always looking for that big idea that captivates people, and you're like, "What do you mean? I have a big idea every single day when I'm trading." So that's your return of capital. I guess that's your dividend.
Well, yeah. I mean, listen, our strategy is very unique in the marketplace. We're in there working every day. We're grinding up P&L. We're making money. And my thought always, even when I got into the business, yeah, I could hit a home run, but it's very, very rare. Okay. And in the time it takes to hit a home run, we could have, Rod Carew type numbers and just be hitting singles up the middle every single day. And then what we do is very quantifiable because you see it every single day. It's not like I'm saying, oh, this AI company is going to be the next Nvidia, and it may be, but the chance of that is very, very small.
I
And
guess
then
that is your
people.
big idea that a gambler at the end of the day cannot beat the casino.
Mm, well, no, that was what I said to you last night. What I said to you last night is the players are winning. They're actually, I mean, not all, but there are a lot of players winning. The the exchange loves the fact that there's so much volume. So they're going out and telling Citadel or Jane Street, it's okay to front run all these orders. We don't care because we're making so much revenue. And it's letting these guys get a false sense, that they're winning when they're really not winning, and they keep trying. It's kind of like I thought this weekend I was going to win lotto. So, we went out and bought tickets. I knew I wasn't winning, or what was it, 290 million to one or something like that. It's the same thing here. These zero DTEs that these maniacs are buying every day. Yeah, you're going to hit once in a blue moon, but overall, if you don't get in and out of these things for profits when you have them, you're going to lose every time. And I don't know why, you know I mean, I do know why. It's a revenue thing. I mean, the revenues that the SEC is making, that the exchanges are making, are astronomical off this stuff. I mean, the volumes are a hundredfold what they were 10 years ago. So it's going to keep going on, but I'm just not understanding what part of investing. Listen, I'm happy zero DTEs are here because I kind of know how to price them, and most people out there are just taking shots. So we feed off of that, and it's been, to be honest with you, it's been very good for us. And I think it's going to continue to get bigger and bigger and bigger. But there's just so much leverage in the overall market here, and there's there's kinks under the armor. And I'm just looking at a couple of stocks that I wanted to discuss. I don't know if you can pull a chart on MSTR.
Yeah.
So MSTR, okay, is MicroStrategies or strategies, and that's down 30% from its high and 50% from its high last year. So whoever bought that thing is getting rinsed, okay? They're getting hit. So that's one.
Here's MSTR, by the way.
Okay. I mean, I don't know how long out that is, but if
That's
you're
a
going
year out. The interesting thing about MSTR is how much it has started to underperform Bitcoin.
Yeah, but Eric, it's still double the value of what it should be. If you take the actual
You're of
Bitcoin
the
off the
mind that
wall.
there should be absolutely no premium
Well,
against
why
Bitcoin.
there should be a discount if you really want to know the truth. It should trade at a slight discount, because if you buy and sell Bitcoin yourself, you're highly liquid to yourself. If you buy this, you're at the whim of what this guy wants to do. And he'll never sell. He's just going to issue more stock. If Bitcoin went under 100,000, he'd have to issue more stock. He'd have to put more debt on. So the
This is
bottom
an
line.
interesting. Yeah, go ahead. Go ahead.
No, the bottom line is, I think it's a sale here still. But my point of bringing this up is I think people are in this name. They've been coaxed by whoever to buy this thing, and they're sitting in it. And so far this year, off the high, they're down 30%. And off the high of last year, they're down 50%. Now let's look at another stock that's up a
Well,
hundred.
1 second. Just back to MSTR. In this chart, you're going to see IBIT, the ETF IBIT, which basically tracks Bitcoin, and then you have MSTR. Look how the spread down here started to really come in and has continued to come in since the middle of July. IBIT and MSTR were tracking each other perfectly right up until mid July. So I don't know what happened, whether it was the advent of all these Bitcoin treasury companies that maybe took some demand out of MSTR, or the fact that they diluted their shareholders, issued more stock to buy Bitcoin, and that
That
may
ne-
have set
that never
sentiment.
stopped the buying. What has stopped the
That never stops
buying?
buying. So spread is
I'll tell you.
getting
You want to
very,
know what
very.
stopped the buying? It's simple. Price. That stopped the buying. And if this thing goes below 300, you're going to see accelerated selling. Okay, down to 280. I don't know if it's going to happen today or when it's going to happen. Um, they had a fantasy dream that they were going to add this to the S&P 500 on Friday, and the reason why, what's it down now, 8, 9, $10, because it wasn't added. I don't think they'll ever add it. I shouldn't say ever, but I don't think for a while they will add it. And then, interestingly enough, I was watching on TV. I don't even know how this is legal, but Eric Trump brought a crypto company public and is worth a half a billion. The kid wasn't worth a dollar. And now he's worth a half a billion on some crypto stock that he brought public. So why do you think
You,
Donald
me-
Trump?
you mentioned you mentioned the S&P 500. They were thinking about putting in MSTR into it. There were three stocks that entered. AppLovin, and here's AppLovin right here. Look at that reaction, right? There was Robinhood, and I'll pull up Robinhood.
Yeah, whatever.
Look at
They're
that
both up
reaction.
like that, dude. It's the same reaction. It's all
Right,
Eric. It's
but
computer algorithms.
there was
It's
one other stock that joined, and look at the difference in the reaction, right? So you saw AppLovin. This is Hood, right? And take a look at ECPG Encore. Nobody heard of this stock, right? Nobody heard of the stock. Completely muted reaction. Only went up maybe like 5%. The other ones went up like 15%. And
what
I
went
think
up.
this is what.
No, 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 no. Robinhood was up 6%, 7%. Okay, it's not up more than that. It was a
Right,
hundred
but
dollars.
nobody's talking about Encore. Everybody's fixated on AppLovin, Robinhood because
They're
they're the
not at,
retail.
but they listen. I've traded these ad deletes for the last 40 years. Okay, you give this another half a day, you sell it, and you'll be just fine. Okay, because this is all algo. But the point is, the algos have taken over. Listen, eh, I talk about this all the time. Like, look at Nvidia stock. Okay, Nvidia stock all night. It trades all night on Robinhood, all night. That's not gambling. Guys are trading this at 3 in the morning, 2 in the morning, 100 shares up all night. I looked at it just to see it because I wanted to have some ammo for the show. It's 100 shares up. You can't even buy 1,000 shares. So all night this thing is going like this, up and down on 100 shares. This is full out Casino Royale. You can now trade 24 hours a day. 24 hours a day on Robinhood, on Interactive, 24 hours a day. Is there really a need for someone to trade this at 3 in the morning? I'm asking you, honestly. I mean, what
Well, this year, there's been a lot of big moves overnight, pure moves.
Eric,
Pure moves from.
Eric, they're not pure moves. They're
There's been a
dislocation
lot
moves.
of pure
They're okay.
moves.
They're dislocation moves. That's what they are.
Maybe,
They
but
they dude, you can move Nvidia $3 on under 1 million shares. The thing has, what does it have? 25 billion shares outstanding? Come on, where is the
yeah,
stop?
it's easy to move these things at night, and maybe that's why it's happening. But it's
What are you
not
talking
just
about?
these.
It's Casino Royale. This is the Royal Casino. You're in the Royal Casino. That's what you're in. You want to gamble tonight? Just turn your screen on. You know what? It reminds me back in the day. This is a funny story. There was a big futures trader, okay? And futures were the only thing that traded at night. That you couldn't trade equities. You obviously couldn't trade options. And this trader got drunk. He literally got drunk and he literally started buying or selling tens of thousands of futures. And this may have been before the e-mini, but and then the guy got in so much trouble, but he literally was drunk. So now you could take your phone with you to the bar, have 4 shots, and start trading. I'm just telling you, this is a casino at its craziest level. That's all I'm saying. And I think it's going to pay dividends for us moving forward as we get tighter into the end of this year. But if you look at all the things out there, whether it be a million ETFs, you can do double gold, 3 times silver, reverse jammy on Bitcoin, all in one product. You don't think that's enough leverage? 3 times silver, 3 times gold, 2 times Bitcoin, reverse this, reverse that, double that. I mean, come on. This is crazy. The people that are doing this don't even understand the leverage that they have on the page. It's actually amazing. So, anyway, I was sort of sidetracked, but MSTR is the first one. Okay, so that's down 30 and 50%. You know that is a retail favorite. Okay, retail loved that stock. Okay, what are they doing now, Eric? The stock's 320. They're hiding. They're waiting.
The
Wait,
problem
this is
also
going to be
is
a text to me
they're
later.
going.
What do I do in my MSTR? I don't know what to do. It could go down. I'm like, yeah, it
The,
could.
the problem is also they're going into MSTR to get exposure to Bitcoin, and that has been a failing idea for 2 months now.
A whole 2 months. I mean, the stock ripped from like $80 to 500, and now it's back to 300 on the way probably lower. And Bitcoin hasn't even had a correction yet. Wait till Bitcoin has a correction, what they're going to do. But I'm just bringing up these names to say what I think is the problem in the market. So the next one is Palantir. Palantir is up 100% for the year. Okay. But it's down 20+% from the high. And people are calling me crying. When that stock got to 142 that day, people were in tears. They were up 75% for the year and they were in tears. So explain to me, why are they in tears? Okay. Did they buy more at the high? Did they buy the high? Like I'm trying to grasp what is going on here. Why people are so, like, their hands are so soft. They're literally freaking out on small down moves after they
I'll
had
tell
great
you,
up moves.
you say it every day. I'll tell you why. They keep buying the high, and temporarily the market rewards them, and they stay in it. And then when something real happens, they start panicking because their their entry into the stock is so high. They This is a market that just continues to change. Like they're looking for some sort of positive confirmation, because I think in the back of their mind they're like, the market shouldn't be up like this so much every day, right? And but they continue to buy, and they
But
get
time out.
rewarded.
But that's reverse of what I'm saying. So you're saying the market is up every day, which the S&P is up near its all-time high every single day. Nasdaq doesn't look as good, but still up. But somehow I just named the stock that's down 50 off its high. Palantir's 20 off its high. Now we'll go to Nvidia, which is probably the next one to fall. It's down 10% off its high, okay, which isn't a lot, but it's enough to, if it falls another 10%, get people really worried. Okay. Now let's go to the next one. How about another crypto darling that also doesn't make a lot of sense, right? Crypto is 12% off its all time high. Okay. And Coinbase, the high was 450. It traded 296 yesterday and it's at 300. So how can anyone be up money in that? Tell me. So what are they waiting for? Praying it's going to come back? Honestly, is that what they're doing? Praying it's going to come back?
I think the market is also constantly getting bailed out by this insane rotation. Like you mentioned, Nvidia. So nobody likes Nvidia anymore. It's off its high, but now they have Broadcom. Like last week, it was like a weird sequence of events. Like we had a little bit of a down move on Monday that quickly got bailed out by Google, right? The antitrust news.
Which
Then you
wasn't
had,
even that big a deal, but whatever.
which wasn't even that big a deal. Then the next day you had Broadcom earnings kick save the market, all right? And then on Friday you get the jobs report, and they're trying to spin it like, bad news is good again. We're going to get rate cuts. And then you have the S&P entry, Robinhood app loving. So it was just like a
That's
weird
not
random
the S&P
sequence of
thing is
events
zero
that
for the
I
moment.
think is changing, is just bailing the retail customer out every single time.
But how do you say that? Because I'm proving to you that it's not. Okay. If you're indexed to the S&P, you're getting bailed out, okay, for some reason. But if you're in these names, and I got more to go through, you're not doing well. And you're at the inflection point soon of where you're going to have to make a move. I mean, what are you going to wait for Palantir to go to 120? It's going to go there, okay? It may not go there next week, but it's going there. It's going there. It looks horrendous, okay? I mean, come on, it's trading like 140 times revenue, not earnings, like revenue. So I mean, these stocks are expensive. Even Microsoft is, from the earnings, the high of the earnings, it's off like 15, 18%. It's truly off 11% from the high close. But that's what I'm saying to you. What is the number? When are these guys going to freak out? When Microsoft gets to 450, 430, like I'm not saying any of these moves are happening tomorrow, but it seems to me, other than them buying these computer algos, literally buy, dude, all the computer does is buy all day. It's like the
Well,
craziest. It's
what's going to
almost
get him out? What's going to get him out the way you want is 2 days where the market falls 5%, like 2 consecutive days, not just one. It's
bro.
got to
We
be two.
can't fall 40 basis points. I mean, it's insane. Like Friday was really good trading, really good trading. And I'm telling you, it stopped on a dime. On a
Yeah,
dime. Like it was like trading like crazy. People were starting to freak. And then the market literally stopped like it was a holiday and it didn't trade the rest of the day. It's like weird. And then you come in and the market's higher. I don't know why it's higher, but it's always higher. So, you know, listen, I see a lot of kinks in the armor. I'm not saying it's today. I don't understand why volatility coming into September, which is generally at minimum a choppy month with a lot of market action, that no one wants to buy anything. I mean, nothing. And we talk about the bond move. The bonds are at 406. Okay. I, we got CPI and PPI. I mean, what's going to happen if either one of those numbers shows anything? I mean, I don't think it will because the numbers are rigged, but why is the market so overly hyped about a quarter point cut and maybe one more at the end of the year? Why are they so hyped? That's what I don't understand. I think they caught everybody the wrong way. Remember, we talked about a week and a half ago when I had a long bond position? I said, it's a weird thing. I'm long bonds, and the only reason why I'm really long bonds is one reason. It's because everybody is short them. And that's what happens here. All they do is they find the positions that people have and they run people out of town. You don't agree? They just run people out of town. It's like they run people out. They ran people out of town here. The weirder trade is the dollar. The dollar has been garbage all year. Is the dollar garbage or what? Dollar can't catch a bid. Okay. I mean, there are so many
gold,
anomalies,
gold, gold, baby, all-time highs every day, up again,
right?
40
Dude,
points.
dude, how come? Let me ask you this. This is what I never understood. Like I've traded gold and it's had over 100, 150 point move in a day. I've watched it. But the way they rig this system with the computers is they don't take it up 100. All they take it up is 30. Like it goes up 40 and 30 and 40 and 30. You don't see like that blow up. Like, why do you think that is? Like back in the day, I've seen gold move over 100. Actually, last year
I've
gold moved over 100
traded,
in a
I've
day.
traded gold limit down in 2013. We don't see that right now.
I don't know what limit down is. I neither do you.
It was like down like 10%. I remember
I
2013. It was
don't
a crazy
know.
night.
Dude, we are so far from limit in anything. There's not one person trading equities that knows that there is a limit down. The whole people trading, when it happens one day, they're going to be like, "What happened? Why is my computer shut off? I don't know what's going on." I mean, it is a novice. Honestly, it's a novice show out there. And listen, the novices are winning to an extent, so you got to respect it. But I'm seeing crazy gambling going on in everything. I'm seeing listing of crazy ETFs. You can land lunar rocks on the moon versus blah blah blah, triple leveraged. Or all you have to do is tell someone they're getting a return of capital, okay? Calling it a capital distribution, but it's really returning your own money and you can raise billions for that thing. Okay? So isn't there some kind of problem here? That people are chasing that kind of stuff. I mean, it's pretty wild. But again, When
You
you have a
mentioned interest
nine,
rates. You mentioned interest rates, and it feels like the market is just hanging on to this thought that a quarter point move is going to somehow open up the floodgates to the next leg of the bull market. And I think that's what the market's mistake is constantly. They feel like a quarter point move somehow is going to control the market in a positive way, when in fact it's just reflecting negativity in the underlying economy. Like, why are they cutting rates? Because they're afraid of a slowdown.
do you want to
They're
know
afraid of.
honestly? Honestly, I was listening to Austin Goolsbee, who's now the Chicago Fed guy, voting member, very bright guy, and he literally came on and he's like, "We're at full employment." He's like, we're pretty much at full employment. And I don't know if I'm going to vote to, I mean, listen, he's only one voting member, but he's like, I don't think I'm going to vote to cut rates. Okay. And we're at full employment and the stock market is exploding. And the truth is, he's actually right. It's just these other clowns are vying for the Fed head job and they want to, let Trump know they want to cut rates, which
It's
is
incredible what the Fed has become. I really hope they're not a political arm. I just because they're supposed to have.
why are you hoping that? They're 100% a political arm, and you saw it at Jackson Hole when the guy literally came out and was like more dovish than the flying dove over the arena. I mean, this guy was ridiculous. Like, even if he believed any of that stuff, what was the reason to say it at Jackson Hole? Like, what is the reason? And it's confusing to say the least because 2 weeks before that, out of the Fed meeting, he wasn't even dovish at all. So I would think that they basically got to him, and listen, it the Fed rate cut can't really play that much into the market. It's a 98.9% chance that it's coming. Everyone knows it's coming, and it's been out there for a while, and it's a quarter point. So what I don't understand what's getting everyone so excited. A quarter point? Dude, the 10-year just moved 35 basis points. That's a lot more than a quarter point. So, and the 10-year, I mean, the 30-year traded above 5 on Thursday. It's now Monday, it's trading 475. It just came in 25 basis points. So the
The other
bond,
thing about rates is a lot of stocks that are sensitive to rates. You look at Toll Brothers. You take a look at mortgage REITs. You take a look at insurance stocks. A lot of segments of the market have been really rallying on this thought of we're getting a quarter point cut.
okay, well, they're probably overdone, but the one sort of
Yeah, absolutely. What do you think about Toll Brothers here?
no idea. You know what? I've traded housing stocks very little in my career. I had them in '08 after we bottomed. You know, I mean, these
You had a
stocks.
good trade in Toll Brothers, I think, earlier this year when you shorted it, right?
Yeah, I over the last couple of years, I've done well for the subscribers in the housing market, both through Pulte Homes and Toll, and the XHB. I actually had a couple of years ago. I had a huge trade in that about 4 years ago when it was making the highs. We caught a really good move. But I don't know. I mean, this stuff is like everything else. It's overvalued. It's a little bit crazy, and you know, here we sit. But let's go back to Nvidia for a second. Let me ask
United
you this.
Healthcare on the breakout this morning. Very interesting.
I don't know. You love that name. I don't know. You could just buy that. Buffett's in it, right? That's it's funny. You know what's funny? I
It's
was
not even
literally I
it's not
was.
even Buffett.
It's not Buffett. No, it's
You
Buffett's
think
guy.
that
It's
right?
Buffett's guy. But what's interesting? I was watching a show and like these guys were saying like all of these people are following the Trump family into all of these Dude, do you understand that Eric Trump just launched an IPO in crypto? Okay. How could that even be allowed? Let me ask you, how could that be allowed? It's the president's son. They're supposed to divest from all these businesses, and they're making billions and billions of dollars bringing crap things public because you know everyone follows what they do because they think that it's guaranteed to make money.
It's a
Honestly,
little third world. It's got a little third world quality in that. Uh, I remember seeing something very recently, like the Trump family added billions of. But let me ask you a different question: why is Congress people, senators, allowed to trade stocks at all? Right? I think it's part of the same question.
I mean, listen, I think they're under a lot of heavy scrutiny, especially now. You're not buying a drug company and then having it, miraculously approve a drug, okay? I mean, that game is over. I mean, that's the Nancy Pelosi game, okay? They're not doing that. They're being scrutinized in a massive way. So I don't see that. But you know, I think that what the Trump family is doing is highly illegal, but whatever. I mean, it is what it is. They're able to do it. And it's like the stock market. Nobody cares that these algos are front running everybody's orders and uncovering orders before they get to the exchange and doing all of these things because everybody is, most people that are investing, not trading zero DTEs, but investing are making money. So no one cares. They don't care. Do you think anyone knows when they're trading for free commission that those orders are being shopped and sold all over the street for money? So the firm, E-Trade or Fidelity or whoever, is getting paid by a firm to see that order flow. Obviously, don't you think that order flow is worth a lot of money to them? No? You
Don't
think
care.
that
They're making money. Market goes up. They don't
I
feel it.
understand, but do you
You know,
think that's fair? Do you think that's fair and legal? That they should take their order flow, not put it on the floor and get a fair execution, but give it to a firm that gets to see it and either run in front of it or do whatever they do and make markets. And really the gross thing is that like Citadel, Jane Street, Virtu, a bunch of these firms, they're called market making firms. I was a market maker in my career. That's what I did. I made markets. We stood up and made real markets and kept liquidity and made sure the markets were tight. They don't make one market, dude. They don't make one market. They don't have a share of stock in the market. They just see an order, run it up or run it down, fill the order, make the money, and move on. Honestly, you think
they're
that
not going to say anything. They're not going to say anything because the market is up. As soon as the market is down 20%, if we're in a bear market, that's when you'll see Elizabeth Warren on the Senate floor or like
listen, I don't know if it will be or
show.
it won't. Listen, I don't know if it will be or it won't be, and I don't know if it's illegal, but I mean, that's most of the market. There is no market maker. Like, back in the day, I would pick up my phone and I would call Goldman Sachs, Morgan Stanley, JP Morgan. I'd say to them, hey, NVIDIA, I want to buy 100,000 shares, which in NVIDIA shouldn't be that big an order.
They were
And they would
probably like, "Oh crap!" I could imagine the guys at Goldman or J.P. Morgan on the other line. They're like, "Hold on, Larry." They're like, "It's Larry." Everybody runs out of the room.
Exactly. After I would do a trade, and then they would complain after they had to hedge it. But no, but
And then you call
but
back screaming.
Eric, my point is, we could get any liquidity that we wanted on the phone. Like dude, I'm telling you, I watched Nvidia overnight. It never had more than 1,000 shares anywhere. Somehow it's going to trade 150 million shares today or more. But you can't buy or sell 1,000 shares anywhere. It's the craziest. It's crazy. I'm just telling you, it's a crazy phenomenon. What's going on? It's a bunch of retail guys going head to head. against each other and ripping stocks up or down. And I have a friend that trades really actively. All this guy does is hit keys all day, hitting keys. Buy, sell, buy, sell, buy, sell, buy, sell. Oh, I got news. Hit that. Bing, bang, boom. I mean, come on. That's like a casino. I mean, that's not, listen, I'm a trader. I take risk. I put positions on, but I mean, what's going on in microseconds and like what happens is, let's say Fidelity has 50 sell orders in a stock. They give that to the same firm, and that firm represents those sell orders and smashes the stock down. It's just, it shouldn't be that way. The guys that are market makers should stand up and make an orderly market. They do the exact opposite. They want to make an unorderly market to create, massive moves with massive lack of liquidity. And it's causing big problems. I mean, big problems. Nobody can hedge, you can't get in and out. You got like, you got Microsoft, like the second biggest stock in the world, behind Nvidia, basically moving like a freight train up and down. I mean, come on. And then the thing is, it's a $500 name. How many people are really investing in it? People from a long time ago, but nobody's holding millions of shares of common. It's too expensive. So all of these things set up to be very, very scary. I'm not saying today, tomorrow. I'm just saying the market is gross. The amount of speculation is absolutely at epic levels. Putting that with the volatility being at the lowest level that I've seen ever for an index of this price. You're trading a 64.5 now, $6,500 animal. 6,500, and you do your, what do you call it? Your one standard deviation, your one whatever. That's 65 handles now, dude. If we move 65 handles, this place would spin upside down. Okay. And that's 1%. Spin upside down. Okay. So the straddle is $19. That means your straddle would triple. And that's not even a big move. So what do you make of that? I mean, the complacency level is at zero. You're trading an index that is size, dude. It is expensive. Not as expensive as the NASDAQ, which is 23,000. Okay. 800. You're trading a $6,500 animal. And they don't even have respect that it can move 1%, you know? So that's the thing that gets me. We're getting late in the podcast. I don't know if you want to talk about other
You know,
markets.
the zero DTE. It's so new. Like when you think about it, you always had Friday expiry, right? But you never had it like every single day up until like 2022, 23. So this is like so new for the market. And I don't think a lot of people realize that. And like you always say, I don't think the story has been written on the risks of zero DTE. There's going to be some massive gamma events, I would say, at the end of the year. We'll see how it all holds up.
You know what? I would say to you that I don't understand what is going on in the market and why the straddles are so low, why volatility. I mean, maybe people are sucking on it. Maybe they're long. I mean, if they're long, it's been a long time that they've been long. I mean, come on, this year in April, what did the volatility get up to? 60, 70? I mean, we had a very high vol. What was the high when we made the low at 4,800? It was probably close to 60, maybe more.
Yeah, close.
So now it's 9 and no one wants to own it. No one can own it. So I think it leads to bigger problems down the road. I think the market is priced per total perfection. And you're looking at the bond market and you're saying, you're going, oh, the market rallied because of the bond market, whatever. You know what? The bond market was going straight down and yields were at 438. And guess what? the stock market made an all-time high. So I I don't know how the yield is even impactful. Oh wait, it doesn't matter
It's
where
not.
it
It's
goes.
just the mantra right now. This is also the U.S. market in particular, more so than any other market in the world, is so sensitive to what the new narrative is. I think it's a reflection of our society as well. What's the new? What's the news? What's trending? So it's a market that is driven by the new narrative. Right now, it's interest rates. You know, uh, last Tuesday night it was Google.
Wait, wait, it
You
went
know,
from not
Friday it's
interest
Apple.
rates. Wait, it went from not interest rates last week when they were above 5% on Thursday. On Thursday, it hit a high yield of 5%. It now it's Monday and now it's about interest rates. But last week when it hit 5%, it wasn't about interest rates.
No,
Okay.
no, then they don't want to
No,
use it.
Eric, it's more like whatever is good, that's what it's about. So when it's bad, then it's not what it's about. Don't worry about it. It's fine. It'll be fine. But, it's interesting, and I want to get close to closing. Earlier this year, money was flowing into Europe, and the DAX was up 25% for the year. And we were down 30 or 20 in 30 in Nasdaq and almost 20 in S&P. That spread, the US market is up 32% and the DAX is lower. So, I mean, this is what we got going on here. So it's like, they're running out of their favorite trade to buy this trade, and the DAX hasn't hit a new high in a long time. I mean, it's not far off its high, but it hasn't extended the move at all, and it's up 20 something percent for the year. Okay. Whereas we're now up 11 or 12%. And listen, the story of this year is not been written in my book. I really think we're going to come into some really big waves coming here. There's just so much stuff out there, and so many things over the last 3 months have been just so ridiculous. You know, we rallied because Trump was going to end the Ukraine Russian war. We rallied like 3 times off that. And now that's not happening. And he keeps saying it's going to happen and this and that. But how come we don't sell off ever off of anything that is supposed to be, you know? Oh, we're supposed to have this and then it doesn't happen and then, like you talk about, trade deals. And this is what I want to sort of end on because we're close to the opening, but like there are no trade deals. There are none. I mean, India walked away from us. They're not dealing with us. Trump can go crazy on them. They're not dealing with us. Okay. Last Monday, the market opened in a tizzy down 100 spoo handles because Putin met Xi and Dooku Kim, or Kim Jong Il and whoever. Dooku Kim was the guy that was killed in the ring, but Kim Jong Il and whoever, all the access of evil, and then that just went away. What? I mean, come on. And where are all the countries with the trade deal? Where are they? And then Besson says that doing tariffs is not a tax. I mean, I don't know what these guys are thinking. But anyway, I'm done talking. I think you guys know my view. I don't know if it's coming today, but I'm getting very, very cautious on the market. I see a lot of these stocks acting poorly. I think you can remain short them. And that's how I'm looking at today. I don't know if you want to close on anything, but we're about 10 minutes from the opening, so I want to get everybody squared up.
Yeah, straddles at 20. Um, Volatility stinks. Too low to do much. Um, I would watch small caps. I would watch, like I said earlier, a lot of these interest rate sensitive stocks that have really benefited from the new mantra. So I'd put up Toll Brothers, I'd put up IWM. The interesting thing about IWM, you would think as the market is like again trying to climb whatever wall of worry we've got going, that
Whoa,
you would
whoa,
have
whoa,
growth.
whoa. I got to stop you. What wall of worry? We're at a record high. Where's the wall
Dude,
of worry?
just the wall of worry just from you is being built every single day on the
Okay.
podcast. What are you talking
What are you talking
about?
about? What are you? You
Single-handedly,
know what?
you
Now I've been so
single-handedly have
mellow for this
promoted.
podcast. You actually came on here every day last week saying you were so bearish out of your mind. So
I was.
all good. Okay. So
I'm
I'm glad you're
trying.
off the
I
camp.
see
I'm
it.
alone. You're
I
I
see
don't know
it. You're
where
not
you are.
alone. You're not alone. You've got
Okay.
friends. You've got
Okay.
friends.
Whatever. Anyway,
But
listen, we're running deep.
back to what
Um,
I was saying. You would think that growth would be leading the way forward. The number one performing factor last week was not growth. It was short interest covering. So that's one. And within the IWM, if you take a look at the growth factor, you know what? Maybe I'll pull it up real quick before we go. Um, but the growth factor in the small cap index has just been dropping. Here's that blue line right there. That's the growth factor within the small cap index. The white line is the growth factor in the S&P 500. Uh, doesn't scream bullish to me, so I'm watching that
all right. Well,
for
listen, I
today.
wish everyone luck. We're running really deep. I appreciate you, and we'll be back to everyone tomorrow. Enjoy. Good luck trading today.